If you're thinking about buying property in South Africa right now, this could be the most expensive mistake or the smartest move of your life. Before we continue, please kindly subscribe, like and comment your opinion. A deep dive market perspective in 2026. The question, is now the worst time to buy property in South Africa? Isn't just about current headline figures, it's about timing, objectives, risk appetite, and market fundamentals. With macroeconomic forces shifting and local conditions evolving, a definitive yes and no answer is too simplistic. Instead, the real answer lies in understanding why the market looks the way it does today, what signals are emerging, and how different types of buyers might interpret them. Market conditions. Not terrible, but mixed signals. As of early 2026, South Africa's residential property market is not in a catastrophic downturn, nor is it frothy with bubble-like price growth. Instead, indicators suggest a moderate and stabilizing market. House price growth is positive. Forecasts put national property price increases around 3 to 5% in 2026, with some regions and property segments outperforming others. Interest rates have been easing after years of high borrowing costs, with a repo rate at around 6.75% and further reductions expected. This trend helps affordability relative to recent years. Inflation is relatively contained around mid-single digits, meaning real price growth isn't wildly outpacing household incomes. These signals point to a market stabilizing rather than collapsing. Affordability and interest rates, improving but not easy. A major factor shaping the current landscape is borrowing costs. After an extended period of elevated interest rates that made mortgages expensive and suppressed buyer demand, the South African Reserve Bank has shifted to a more accommodative stance. Recent rate cuts have steadily trimmed bond costs, increasing buyer qualification power and monthly repayment relief. Analysts forecast additional modest cuts in 2026, which could further tilt conditions in favor of buyers. However, rates remain well above the ultra-low levels that characterized the pre-2022 boom, so some affordability pressure still exists, especially for first-time buyers and investors relying heavily on leverage. Regional dynamics matter. South Africa isn't one homogeneous property market. Some locales are outperforming while others lag. Western Cape and parts of Gauteng, especially desirable suburbs, continue to see strong demand and relatively quick sales, suggesting resilience in sought-after nodes. Smaller towns and weaker nodes may see slower pricing momentum and longer selling times. Data from market trackers indicate average selling times around 12+ weeks nationally, reflecting a balanced or buyer-leaning market. For buyers who prioritize location, this means that timing variations aren't uniform. Prime areas may be pricier and more competitive, while secondary markets could offer real opportunities. Market sentiment, from caution to opportunism. Sentiment among professionals and potential buyers is shifting. Some industry voices emphasize the strategic opportunity now available buyers face less competition. Sellers in certain segments are more willing to negotiate, and rental yields remain attractive in many urban cores. Others note persistent headwinds, slow economic growth, unemployment challenges, and financing constraints that could temper enthusiasm and keep parts of the market subdued. The bottom line: a neutral to mildly positive sentiment, not a fear-driven collapse. So, is it the worst time? No, but it could be one of the most strategic times for certain buyers. Here's why. For long-term owner-occupiers. If your aim is a home to live in, buying when interest rates begin to ease, especially in stable or appreciating locales, can be advantageous. You aren't trying to time short-term price peaks. You're securing shelter and potentially building equity over years or decades. For investors, buy to rent. Rental markets in key areas remain strong. With yields in many urban centers still appealing and affordability improving, now can be a smart entry point, particularly if you find properties with strong rental fundamentals. For timing the market. If your sole ambition is to buy low, sell high quickly, the market isn't offering dramatic discounts right now. Prices aren't plummeting, they're growing modestly. Waiting for a bottom may lead only to stagnation or missing out on gradual gains. For speculative flippers, short-term speculation buying with the hope of quick value jumps is tougher in a market without significant volatility. This is not a boom phase. Final thought. Instead of asking whether this is the worst or best time ever to buy property in South Africa, a more useful framing is now the best time for your personal goals, risk tolerance, and financial position? For many buyers, especially those with a long-term view, current conditions present opportunities rather than warning signs. Prices are stable, interest rate trends are improving, and fundamentals like rental demand remain solid. But success always depends on location choice, financial preparedness, and purpose of purchase. Thanks for watching. Please subscribe for more updates.